Dear investor, Edelweiss Private Wealth Management is pleased to present you the latest issue of Investment Strategy Report for October 2020. Let's take a look at key highlights of September 2020. Rapid economic recovery witnessed across developed and emerging economies, aided by unprecedented fiscal as well as monetary stimulus, has now started to fade away. In the US, consumer confidence level has seen a drastic drop after pent-up demand was satiated. US government spending has slowed down after initial rounds of stimulus. Going forward, recovery in the economic activities will be largely dependent on additional fiscal stimulus. Back in India, both manufacturing as well as service PMI have shown promising growth. As a result, in the month of September, GST collection was the highest since the beginning of lockdown. However, retail demand is still quite sluggish. Growth in credit offtake is also quite disappointing and is hovering close to the decadal low levels. Equity view. The frontline stocks in Indian equity market remained quite volatile in the last month. However, the broader market continued on recovery path. For FIIs, Indian equity market has been one of the most favored destinations among major emerging economies. In calendar year 2020, FIIs invested approximately $6 billion in Indian equity market. Since various indicators are giving mixed signals about valuations of Indian equity markets, a lot of uncertainty can be expected in the short term. Investors can look to add equity in staggered manner and accelerate deployment in case of correction. We continue with tactical underweight call on equity allocation based on respective risk profiles. Continued stagnation in consumer demand and sluggish inflows in MFs indicate absence of trigger for upward movement in the markets. Recovery in high-frequency indicators and persisting global liquidity denote that the downside is also limited. Fixed income view. Consistent supply-side price shocks both on food and non-food segments have widened the gap between CPI and WPI inflation. FIIs flows in debt have turned positive after 10 months. Foreign investors have turned buyers in anticipation of central banks' efforts of softening long-term yields in order to support the government's massive borrowing program. The yields at longer end of the curve may remain under pressure due to factors like high fiscal deficit and large government borrowings. RBI has been aiming clearly at easing sovereign rates by adopting unconventional measures like enhanced OMOs and on-tap TLTROs. The sovereign curve has marginally flattened in the last month, but continues to be considerably steep. Any flattening of the yield curve could lead to a combination of higher accruals accompanied by mark-to-market gains. It is advisable for investors to stick to good quality credit with comparatively higher yields. Investments with predictable and regular cash flow can also be considered.